It is a story as old as time itself. A new trader will jump into day trading expecting to get rich overnight without having any prior knowledge about trading, just to watch their account dwindle away and possibly even blow their account altogether. As a beginner, day trading is one of the most dangerous things you can do. And in this video, what I'm going to do is break down why that is the case and 3 options that you have that will nearly guarantee that you avoid that disastrous situation and turn day trading into a source of income. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll be right back after the intro and disclaimer. Welcome back. Let's go ahead and get started. First off, I'm going to explain the main 4 reasons that day trading is a disaster for 95% of beginners. Then I'm going to move on to 3 options that you have that will help you make day trading a source of income. Let's talk about the 4 main reasons that day trading is a disaster for beginners first. Reason number 1, if you are a complete beginner, then you likely don't have a trading plan. And frankly, with no disrespect, you don't know how to trade yet. And what tends to happen if you don't know how to do something? Are you normally good at something you don't know how to do? No, not at all. So if you don't have the skill necessary to trade, if you don't have a completed trading plan, then starting to day trade is going to destroy your trading account, because you're going to be trading based on emotions like fear and greed instead of trading based on a statistic advantage that gives you an edge over the market over time. And this not knowing how to trade leads me into the next reason that day trading can be a disaster for beginners. And reason number 2 is that day trading comes with a high frequency of trades. So let's put these 2 together. If you're brand new to trading, you don't really know what you're doing, you don't know how to trade, you don't have a proven trading plan, and then you trade more, what's going to happen? You're going to lose money faster. Because the frequency of trades on lower time frames like day trading, you're going to have more trades. So it's just going to give you the opportunity to lose money a lot faster. And that actually leads really well into reason number 3, day trading is a disaster for beginners. Which is that beginners, including myself when I first started, tend to look at trading as a get rich quick idea. And in order to get rich fast, they tend to know that they have to risk a lot of money per trade. So what that means is that beginners normally have a lack of risk management. This lack of risk management, combined with a high frequency of trades, combined with the fact that you don't have a proven trading plan, if you are a complete beginner, can make day trading an absolute disaster for you if you are just starting out. And reason number 4 is just the simple fact that you likely don't have time to dedicate to day trading. In order to day trade, you would normally need to schedule out a block of time between 4 to 8 hours that you are actually trading. And these hours need to be when the market has volatility. That most of the time is during the New York session or the London session. Now, as a beginner, for the most part, I know I did, most of us as beginners have a full-time job that we do, or at least a part-time job that we have to show up to. So with this being the case, you will either have to sacrifice your job that's maintaining your livelihood or sacrifice sleep in order to have a proper schedule for day trading, and that's just not realistic for most beginners. Before we talk about the 3 options you have that'll help you make money as a day trader, first, I want to make this very clear. I am not against day trading whatsoever. Once you get good at trading, day trading can be extremely profitable. But the key part of that sentence is once you get good at trading. If you don't know what you're doing and you try to day trade, that's when it can be a disaster. If you know what you're doing, you already have a profitable trading plan, and you day trade, the higher frequency of trades that comes with can help you make a lot more money than you can doing something like swing trading or long-term investing. So with that being the case, let's go ahead and talk about 3 options you have that can help you make money as a day trader. Option numero 1 is to create a full trading plan based around day trading by learning or creating a strategy or strategies that you can use in the market. So let's talk about the steps you need to take in order to create a full trading plan around day trading. First off, you will need to create a trading schedule. Again, in order to day trade, you're going to need to have a block of time between 4 and 8 hours where you can stay behind your computer. And this block of time normally needs to be when markets are most volatile, either in the New York or London session. Next, inside of this trading plan, you will need to have the rules for the trading system or trading systems that you've decided to create or learn from someone else. And I'm going to go over this a little more once we get through all 4 steps of creating your own trading plan around day trading. I'm going to talk to you a little bit about how to create your own trading system. But let's continue with this on step number 3. And you heard it here first, backtest the shit out of your trading system. What I mean by that is once you've created this trading system, or even if it's a system that you've learned from someone else, you need to take the rules for that system and backtest them. This simply means you need to go back in historic data and look for every time on a specific currency pair and whatever specific time frame you've chose to trade on. You need to look for every time the rules for the system you are going to be trading have happened. You need to do this a lot. You need to do this at least 100 times per pair and per time frame that you're planning to trade with this specific strategy. If you're trading stocks, you need to do this 100 times per stock and per time frame that you're planning to trade this system on. This process of backtesting not only ensures that we're trading something that's at least been profitable in the past and is likely to be profitable in the future, but also helps us with our trading psychology and helps us to understand the system and the strategy that we're trading by showing us this system going in and out of drawdowns, going in and out of losing streaks, and still coming out ahead on the other side of that after a large sample size of trades. And lastly, number 4 is to create a reasonable risk management plan. If you take these 4 steps, you will have created your own trading plan for day trading. And after doing so, then you can demo trade this trading plan. And at some point after being profitable in demo trading, let's say you decide to demo trade for a month to see if it's profitable and you are profitable for that month, then you can decide if you want to open up a live account and actually trade this full system. But doing this is going to prepare you for day trading, whereas when you are a complete beginner, without doing any of this work, you are just gambling. You are trading based on emotion, based on fear and greed, based on something someone else said. When you do this, when you take these steps and create your own full trading plan around day trading, you are putting in the work and that work will pay off. Now, let's go ahead and talk about how to create your own system. When it comes to learning a system, in order to do this, all you have to do is go on YouTube or go to whoever your mentor is, find out the system they use and make sure it's rules-based. If it is rules-based, you can take that exact system or multiple systems and backtest those systems and then create a trading plan around them. But if you want to create one yourself, here's the process that I personally use to create trading systems. I call this process CEST, C-E-S-T. And what this stands for is conditions, an actual entry reason, where am I going to have my stop loss, and where am I going to have my target? And let me break down each of these really quickly. Conditions would be things like the market's in trend or at a level of structure or any specific indicators you want to use. Let's say the RSI is oversold, the RSI has divergence, there's a higher time frame level of structure, the trend on the higher time frame is aligning with my trading time frame. Conditions are infinite. You can have any number of conditions when you are creating a trading system. Next up, we have entries. For me, what I use as entries 95% of the time is either chart patterns like double tops and double bottoms, head and shoulder patterns, or candlestick patterns like engulfing pattern or something like a hammer or a shooting star candle. Combining these conditions with this entry is what gives us our actual reason to press the buy or sell button, but we're not done yet. After we've created conditions and entry, we need to know where we're getting out if the market does not cooperate with our analysis. Trading's not about being right 100% of the time. It's about managing risk, understanding our system, and having a system that actually gives us an edge over a large sample size of trades. So having a stop loss is imperative with that being the case. So we need to know where we're getting out if we're wrong. And lastly, we need to at least have an idea of where we're going to get out if we're actually right. So that is option number 1, and that is the process of creating a full system if that's the route you want to take, or you can just learn a system from someone else. With that being said, we have plenty of strategies and systems based on the CEST model available here on our channel, along with inside of the TTC Forex University, which is our VIP mentorship programs. If you want a little bit more of a mentorship and more guidance on becoming a profitable day trader, feel free to check that out. It's going to be the top link in the description, or go to www.thetradingchannel.com. And for those of you who stay till the end of the video, I'll be sharing a full rules-based day trading strategy with you. So stick around for that. And now let's move on to option number 2. This option is for those of you who are like, I'm not interested in developing a trading strategy myself or learning a rules-based trading strategy from someone else. And option number 2 is for you to create a full discretionary trading plan around day trading and demo trade that until you're profitable. Now, Discretionary trading is much more subjective, which means it's not based on a specific set of rules. A discretionary trading approach would be you looking at a chart and going, hey, based on what I see on this chart, I'm expecting price to do this, but you're doing it without any rules. And if that's the path you want to follow, let me go ahead and tell you, it is much more difficult to follow that path than it is to adopt a rules-based trading system or create a rules-based trading system, but it is doable. And here's the path you would need to take and the steps you would need to take to accomplish a discretionary trading plan built around day trading. Number one is still the same. You still need a schedule where you're behind your computer at the same time every single day, and you're planning to day trade during that block of time between 4 and 8 hours. Number two is that you're going to have a discretionary trading approach. You need to study the shit out of technical analysis so you completely understand trends, structure, patterns, indicators, whatever it is you're going to be trading based around. You need a very clear understanding of those things. Next, you still need a reasonable risk management plan when you're taking this approach. And finally, the fourth step in this is to demo trade the shit out of your discretionary trading approach. After a 10-year trading career, if I was starting and wanted to have a discretionary approach to day trading, what I would do is just open a demo account immediately while studying technical analysis. And I would trade in that demo account until I was profitable consistently for 3 months in a row with my day trading. And at that point is when you can decide whether or not you want to open up a live account and utilize your discretionary approach in a live account. Don't do it from jump. Don't do it from the get-go and just start as a beginner and go, I'm going to be good enough at discretionary trading. You're not. I promise. I tried that. And I'm not telling you that to make you feel bad or make it seem like I'm fussing at you or anything like that. I'm just telling you the truth from my own experience. I thought that when I came into markets, and I got slaughtered because I thought I could just take a discretionary trading approach without any practice, and it caused me to blow my first account and lose a ton of money at the beginning of my own trading career. So I'm trying to help you avoid that mistake. If you're going to take this discretionary approach to day trading, make sure that first you can be consistently profitable with this day trading approach, with this discretionary approach, for at least 3 months straight. In just a second, I'll be sharing with you an entire rules-based trading strategy that's been profitable for me for many years. So be sure to stick around for that. But for now, let's go over option number 3, which is simply to swing trade instead of day trade. Swing trading happens on higher time frames. So what this does is annihilate 2 out of the 4 reasons that day trading is so detrimental for beginners. One of those being the frequency of trades while swing trading is going to be less. So even if you jump into markets and you make mistakes and you're losing trades while you're swing trading, you're going to be losing less trades because on higher time frames, the frequency of trades you get, whether that be based on a discretionary trading approach or based on a systematic strategy, the frequency of trades is going to be smaller, so you will lose money less frequently. You will lose money slower, so that kind of annihilates that reason why day trading is so dangerous for beginners. Another thing is the schedule. Whenever it comes to day trading, finding the time that's a 4-hour or an 8-hour block of time that you can be in front of your computer can be really difficult. But in swing trading, it makes it much easier to develop a schedule around a full-time job or other obligations. To give you an example of this, the strategy that I use right now, I mainly trade on 4-hour charts at the moment. The strategy I use right now is extremely similar to the strategy I used whenever I had a full-time job, including the schedule. All I do is have an alarm for the close of every 4-hour candle. 95% of my trades, the actual reason for entry is the close of a 4-hour candle. So I just have an alarm set for every 4 hours. I was able to accomplish and to utilize this swing trading strategy even with a full-time job because of the way swing trading allows you to build your schedule. So if this is the approach you want to take, let's take a look at the steps you need to accomplish. Step number 1 is exactly the same. You still need a schedule, but again, scheduling around swing trading, much easier than scheduling around day trading. Next up, you're going to need either a discretionary approach to swing trading or a full system that's rules-based that beats the market, as in it has an edge over time. Next up, you'll still need to have a reasonable risk management plan. And another difference between day trading and swing trading, day trading, you have to be patient. Don't get me wrong. Absolutely. It is necessary, no matter what time frame you're trading, for you to be patient. But swing trading requires a bit more patience because from a swing trading approach, it's going to take longer for trades to happen. So your analysis isn't going to play out immediately how it seems that it does while you're day trading. Also, it's going to take longer for targets or stop losses to get hit after you're in a trade. So being patient is extremely important when it comes to a swing trading approach. And with that said, that is option number 3. Now, we are about to dive into a full rules-based day trading strategy that was developed utilizing the CEST acronym that you learned early in the video. And this strategy is one that has proven to be profitable for me for years. But before we get into that, if you've enjoyed the video so far, be sure to click that like button for me. Go ahead and subscribe if you are new. And again, if you're ready for some more advanced training and you want more of a mentorship from me personally, then feel free to check out the TTC Forex University by clicking the top link in the description or going to www.thetradingchannel.com. Now, the strategy you're about to learn is a day trading strategy that I've utilized for years across all markets, including Forex, stocks, and crypto. This is a strategy from a video I shot over 2 years ago, but again, it's still just as applicable and I still use it anytime I want to trade on lower time frames. I still use it to this day to day trade with. So if you want to learn the exact systematic strategy that I use anytime I trade on lower time frames, then be sure to check this out and I will see you directly after. For the strategy you're learning today, we're going to align ourselves on the correct side of the market based around trend. The specific way we are going to do that is by utilizing 2 time frames. Our first time frame needs to be 1 time frame up from the time frame we plan to trade on. And we're going to dive into that in just a second. And our second time frame is going to be the time frame we actually place the trade on. So here on the Aussie Canada, the trade was placed on a 5-minute chart. So what I mean by what I just said is that where we find the trend of this market, in order to be on the right side of the market when we place our trade, we want to be in line with the higher time frame trend. In order to find that, if we're trading the 5-minute chart, then I'm going to look 1 time frame up to the 15-minute chart. Now, as you can see right here, this is all the time frames that I use. So I always go up 1 time frame with this strategy. If I'm trading on the 15-minute chart, then I'm going up to the 1 hour. If I'm trading on the 1 hour, I'm going up to the 4 hour. If I'm trading on the 4 hour, I'm going up to the daily. Now, I rarely go up any higher than that, but that is the exact difference in time frames that I personally use. So again, on this chart, what trend are we in? You can tell because I already have it drawn out for you, but this is an obvious downtrend because we have a starting point right here, which is one of our major swing levels. We then have a major swing level here, a major swing level here, and a major swing level here, followed by a lower high major swing level and a lower low major swing level. This tells me that I'm definitely in a downtrend. I know for a fact I'm in a downtrend at this point. So if I want to align myself on the right side of the market based on my higher time frame trend, then I want to be looking for short trades. So the first step in this strategy is we are aligning ourselves on the right side of the market using higher time frame trend. Once a major swing level is broken, that is the level you want to look at for trend continuation. So as this market pulls back up to this area, that's where I want to look for possible opportunities to hop on that trend and ride it to the downside. As you can see, this works out very often. If we go back right here to our previous major swing level, yeah, I know I widened that area a bit, but these are zones, not just lines on a chart. You can see that this is exactly where the market pulled back to before pushing down and breaking another major swing level. So we're expecting that to continuously happen until the market shows us it doesn't want to do that anymore by breaking through this major swing level, our resistance level, and creating a possible reversal. So with all that being the case, after identifying my trend and identifying the previous major swing level that was broken on my higher time frame, and in this case, that is the 15-minute chart because I'm planning to trade on the 5-minute chart, the next thing I do is extremely simple. I just drop down to that 5-minute chart. I wait on the market, asset, whatever it is I'm trading, I wait on it to come back up into this area. And then I want to see rejection. And I have very specific rules for that rejection too. I'm not going to leave you hanging on the entry reason. Don't worry. The whole point of all of this, by the way, is to make sure we have, what did we say at the beginning? If you're going to be a successful day trader, if you want to make money from day trading, you need a strategy that's rules-based. so you can stay consistent to it, and it's proven to make money over time. This is a strategy I've used for nearly a decade, and it's proven to make money for me during that time. And it's also so rules-based that you can stay consistent to it. One rule is higher time frame trend. Let's align ourselves with that. Second rule, look for the last major swing level that was broken. The third rule is rejection. And the way we're looking for rejection is by looking for the market to create a high, come to that high, and then be rejected from it by pushing lower. This is known as a double top, and it's an extremely simple price pattern that I use for entry reasons. Now, one small caveat I do have is that after this double top, I want to see a red candle. So we have a test, we have our second test of a resistance level, and then I want to see a red candle here for the push down. You will see that on the chart for this trade right now. Okay, so here we have the market exactly where it was whenever I entered this trade. Everything's lining up about the rules we just discussed. We're in line with our higher time frame trend. We're at the previous major swing level that was broken. What did I say I was looking for? Well, as you can see, as we push up here, we get a high, but then the market's not ready to continue lower because why? We break through that high and make a higher high. So at this point, I'm not interested in going short and trying to ride this trend down until I get actual confirmation. And do we get it here as we push back up? No, we get a move up that ends up closing above our previous high. We get no rejection at this level. So what I'm waiting for is when this market is pushed down, we get a push back up to that same level, and then we see rejection being this red candle right here. And my exact rules for this, I'll go ahead and share them with you, is that for a double top, I am looking for the market to push up and get between the high of the wick and the highest bodies of this entire little area. And I'll explain that in just a second whenever I get this a little bit darker for you. So this is my area. It's between the highest bodies of this previous swing high and the highest wick of this previous swing high. What I want to see is wicks of candles touching this area. Bodies of candles can close in this area. The only thing that cannot happen is I do not want to see a close above here because that's exactly what's been happening, right? That's not showing rejection. Close above, close above. What I want to see is rejection. So a wick needs to get into this zone, or a body needs to get into this zone of a candle, and then I want to see a red candle showing me that sellers are trying to take control. When you combine all of that and you have your alignment with a higher time frame trend, you have the market inside of a major swing level, the previous one that was broken, that is major structure, and that's one of the most likely places for a market to continue in trend. And you add all of that to an objective entry reason as powerful as a double top with selling pressure afterwards, that being that red candle, then what it creates is a consistent way of trading because there's rules for every bit of it. So that equals consistency, right? And it creates a money-making edge played out over a large sample size, at least from my own point of view and my own trading that I have done with this strategy. It has been one of the best I've discovered in the past 10 years. I think it took like an hour or so for this whole trade to play out and hit about a 2.4 to 1 reward to risk ratio. But this is a bearish version of the strategy. Hopefully that was extremely clear, but just to clear things up a little bit further and to give you an example of a bullish version of this, what we're going to do now is go to a different chart and take a look at a bullish version of this strategy. I'll see you there. So remember when I was saying that this works on all different markets and in all different time frames? Well, right now, we're going to be looking for a trade on the 15-minute chart. So what time frame will I be looking at if that's the case for my trend identification to make sure I'm on the right side of the market with this trade? If I'm trading on the 15-minute, I want to look up at the 1-hour chart for my trend identification and that major swing level that was broken last. Just to be sure that you understand this, because it is a pivotal part of your trading career to understand major swing levels and how to draw out a trend. It will play a vital part in nearly any strategy that you try to trade, or if you're just someone that is going to trade with a discretionary approach, you need to understand how to identify trends. So from this being our starting point, we have a push up to a major swing high, pull back to a major swing low, push up to a major swing high, pull back to a major swing low, push up. Where do we break this level? And remember, feel free No way that's going to work. Remember, feel free to put horizontal lines at your major swing levels. So at this point, we know that this would be our major swing level if we had more of a pullback. Really, it's right here. Again, no way to make this completely objective. It just depends on how you see the market. From here, I would go to here, then move my horizontal line up. We have a major swing level that's broken here. So now we would have this move to a major swing level, back down to an equal low for our major swing level, back up now. Where do we break? Here. Right over here, right? Since we broke right here, that means that I'm now looking at this as my next major swing level. This is my next major swing low, major swing high. If we move the chart forward now and I click the button one time, you'll see that we have this pullback. So what are we doing? We're in an uptrend. Which direction do we want to trade? To the upside, right? What do we need to point out? We need to point out and draw a zone near our last level of resistance, our last major swing level, which is these two right here. I'm combining them here because they are so close together height-wise. Since they're both really, really close to around the $278 mark, I'm just putting that in the middle of the zone. This is just how you'll have to draw out zones. They're not lines on a chart. Support and resistance are a lot more like zones. So in this case, we have our area that we're looking at, the previously broken major swing level. Again, we're just splitting the difference between these two because they're so close together. And we have the market in this area. What's the next step? At this point, we want to drop down to our actual trading time frame, which is going to be the 15-minute chart in this case. And now we can actually look for, what are we looking for if we're looking for a bullish trade? It's not going to be a double top, right? We're going to be looking for a double bottom in this case. So there we have a push up. What we need to see is the market come down and now reject this area here. Somehow, some way, it needs to come down and show us rejection of that. And the way we do that is just by candles getting into that zone, whether that be by wicks or by candle bodies themselves, and then a green candle to show us buying pressure out of it. So if we keep pushing forward, we're in the zone, and now we're still in the zone, and boom, we now have a green candle. This would be our actual entry. The close of that candle / the open of the next candle would be the entry for me and the way I trade this. After that, I would just have a stop loss below the lowest low of the rejection of the double bottom. After I had my stop loss placed, my target would be back up at the previous resistance level right over here. And I would probably pick this one just because it's slightly lower than the other. So let's do that. Still set up with a 2.3 to 1 reward to risk ratio here on Litecoin. And let's see how this plays out. As you can see, the market takes off to the upside, easily hitting our targets. So that's a bullish version of this strategy. So now let's dive into a recap of everything here on the chart of Microsoft. As I said, works in all different markets and on all different time frames. We're looking at the 4-hour chart. After this, I have something extremely important to share with those of you who are actually serious about starting a day trading career. So look forward to that after we go through this recap. Right now, let's recap what we've already learned. Let's use every bit of that strategy here on Microsoft. So on Microsoft, we start from a starting point that is right down here. We have a push up to a major swing high, a pullback to a major swing low, a push up, a pullback. We're just drawing it out again as a recap and to make sure you completely understand this. Pullback to here. When do we break above this high? Right here. Okay. So we break above the high, we have another pullback, and this pullback then creates a new high for another major swing level. At this point, what's the trend on our 4-hour chart? We're going to be trading on the 1 hour, so we just went up one time frame. On our 4-hour chart, we are in an uptrend. While we're in this uptrend, what is the latest major swing level that we broke? It is right here. This is the latest major swing level according to the rules of our trading strategy that we've broken. Now we have a pullback into that level. Let's drop down to a smaller time frame. If we're looking for the higher time frame trend and structure on the 4-hour, that means we're trading on the 1 hour. Again, as I explained earlier, and since this is a recap, I'll go over everything. So if you're on the 5-minute looking for trades, you look for structure and trend on 15. If you're on the 1 hour looking for trades, you look for structure and trend on the 4-hour. And if you're on the 4-hour looking for trades, you look at the daily for your trend and structure. Now, let's drop down to our trading time frame. What are we looking for here? Well, in the case of a bullish trade, we'd be looking for a double bottom. Does this meet the rules for our double bottom? Yes, it does. We have a push down, we have a bottom, we then have a neckline. We're looking for a retest of this area without closing below it that gives us buying pressure. We then get a green candle followed by an even bigger green candle, which is where our entry would be on that buying pressure candle. For a stop loss, we would go below this low, and I use something called an ATR indicator. I have a full video for that. It's up in the left-hand side of your screen, right-hand side of your screen, wherever it's at. It's in the cards. You'll be able to see it. It should pop up right now. ATR is right up here, and what it shows me is that we currently have a $2.31 ATR. It gives you the average movement of the last 14 candles. It's pretty much what the ATR does to keep you in line with the volatility of the market. So below our swing low, I want to go down $2.31. If our swing low is at 185.20, then I want to be at somewhere around 182.89 for my stop loss. So 182.89, that's going to be close enough, even though it says 92. I want my target to be back up at previous resistance right up here, the previous major swing high. Then I hit play. We'll see how this plays out. And as you can see, eventually coming up and hitting those targets, we did have a little gap down here, but it didn't even come close to the stop loss. So there is a recap of every part of the strategy. Hopefully that was good enough to get you to a point of completely understanding the strategy, but the strategy is not all you need. Look on my neck right now. This is a triangle, and there is a reason that I'm wearing triangle jewelry today, and it's because I want to share something extremely important for those of you who are serious about your trading. This is something you must master, and that is the triangle of trading success. So the triangle of trading success, if you have not heard of it, is 3 skills that you must have in order to make money in any financial market. If you're a day trader, swing trader, long-term investor, it does not matter. Everyone that makes money trading in financial markets has these 3 skills mastered. The first one is exactly what we went over today. They have a strategy that they can stay consistent to and that makes money over time. This is a huge part of trading success, but it's not everything in any way, shape, or form. You also must have a risk management plan that keeps you out of your emotions and initially keeps you from blowing your account. The strategy we just looked at is a strategy that wins somewhere around, it's a little bit less than 50, but somewhere around 50% of the time, and has a 2-to-1 reward to risk ratio. This provides me with an edge. This provides me with a money-making strategy over long periods of time. But if I risk my entire account value on my first trade, then I have it's gambling. I have a 50-50 chance of losing. That's why we need a risk management plan in place that keeps us in the market long enough, gives us chips and a chair at a poker table in order to let this edge play out, because otherwise we're just gambling. So the important part of this is to be sure that initially our risk management plan keeps us from really having the chance to blow an account. There's always a chance, but it reduces that chance by 99%. And the second part of a risk management plan is to keep you out of your emotions, to keep fear and greed from controlling your decisions while you're placing trades in any financial market. The way we keep that fear and greed from controlling us is by making the amount we lose per trade being small enough for us to be able to handle, because you will lose trades. I have losing trades. You will have losing trades, but the important part is not to let them affect you emotionally, because if they affect you emotionally, you might make mistakes that ruin your edge, that ruin your statistic advantage, and that ruin your money-making strategy. And all of this is irrelevant if you can't find a way to have good trading psychology, or discipline is what this is also known as. Trading psychology, it allows you to stick to that strategy, to not have FOMO, not switch strategies, to not just place trades because you just got stopped out of one and now you're going to go super aggressive and you're going to risk more than normal because you just lost a trade and you want to try to make that money back. All of that is emotional mistakes due to having bad trading psychology. So this is something you must absolutely master in order to create a profitable trading career. That was a little bonus on the other things you need outside of a strategy. So with that, you now have a full plan to turn day trading into a source of income, and you know the dangers of starting to day trade as a complete beginner without first completing the steps we've talked about throughout this video. If you found that to be helpful, go ahead and click that like button for me. Go ahead and subscribe if you're new. We come out with videos like this each and every week. Don't forget, if you're interested in some more advanced training and to be mentored by me personally, go ahead and click the top link in the description to learn more about the TTC Forex University. If you're not interested in that, no big deal at all. I wish you the best of luck on all your future trades. I hope you trade green, and I'll talk to you in the next video. See you soon.